Joining us on the show is Philip Parker, founder and managing director and CIO of Parker Asset Management, and Justin O'Brien, director at the Centre of Law, Markets and Regulation at the University of New South Wales. Both gentlemen join us from Sydney, Australia today. All right, let's start off this conversation with number one. How critical and how much of a smoking gun is there, Philip, in this whole, this whole basically mission to find out what went on with LIBOR? You kick it off for us.
Well, I think it's really just a continuation of, a whole series of systemic issues with banking sectors around the world. Do I think it's going to lead to anything absolutely catastrophic in the short to mid-term? No, I don't. But what really surprises me is the nature of how it occurred and the fact that you've got, critical rate-setting guys sitting next to trading guys. And, whilst Mr. Diamond argued that, they were separate from the bank in that sense and it wasn't going to affect, it was based on their own profitability, I find that very hard to believe, because let's talk about it, it's the bank that we're talking about here.
Yeah, okay. Justin, hasn't the whole decades-long LIBOR infrastructure, though, isn't it sort of set up for failure and for mismatching? I mean, these are estimates, not based on actual transactions. I mean, from time to time, people have thought, mulled over the idea of creating another actual rate that's a little more accurate. But the fact that they're estimates, I mean, to me, it seems like it's marked for failure from the very beginning.
Yeah, absolutely. I mean, there was a very famous political strategist in 1992 who spearheaded Bill Clinton's successful campaign for the White House with the slogan, "It's the economy, stupid." This time round, it's the conflict, stupid. The system itself was inherently conflicted. And it seems to me from the emails that have been released from the FSA and indeed from the Department of Justice in the United States that Barclays was not acting alone. And the kind of behavior that we've seen with the Barclays traders, it is highly, highly probable that the counterparties who are asking the Barclays traders to change the LIBOR rate were equally asking other banks. Were they successful in that? We await the outcome of the continuing investigation.
Okay, Philip, what's this all going to come to? I mean, Barclays is just the tip of the proverbial iceberg in this case. I mean, you got a dozen or more already implicated in this, and it's going to be basically one inquisition after another after another. I mean, if it's an industry-wide thing and it's part of the DNA of the banking culture, it's kind of hard to pin all the blame to the bankers themselves. I mean, this is what everybody else did, right?
Yeah, I mean, what I see as the major issue here is the susceptibility of one part of the bank to be affected by another part of the bank, all sitting in the same trading room. I was a bond trader for a UK firm that was ironically taken over by a big American firm, and what we sort of noticed when they came into the place was that the retail side of the business was crunched and the wholesale side was concentrated on. And when you concentrate on the wholesale side of the business and you forget your customer, you have a lot of issues going on. So I think the shareholders of Barclays and other banks that have been affected by this, I'm an equity funds manager, I think they should be asking a lot of questions. I really feel that there is a lot more investigation to go into this, and I think it's been driven by profitability and short-term culture of, if I make X millions this year for my trading book, well, you know what, if it all fails, I can go next door and work for someone else. Well, those days have definitely, if not completely over, almost over. So, yeah, I agree with you. I think that there's a lot more investigation to go about the whole way these guys are controlled.
But I think that what's interesting here is that this is really the beginning of the process. I mean, initially you had UBS agreeing with the Department of Justice Antitrust Division a conditional leniency agreement. The investigation escalated and brought in the Department of Justice Criminal Division, and that is the part of the Department of Justice that Barclays has settled with. So Barclays has made a calculated decision here.
£250 million.
Yes, but it's made a calculated decision to settle and to settle early for 200 or 160 million in relation to the Department of Justice. But interestingly, under the terms of the non-prosecution agreement that Barclays reached with the Department of Justice, it has to cooperate with authorities to lead to further criminal investigations. That means that other banks and other individuals within Barclays itself are liable to prosecution. The cost of settlement has just gone up.
Okay, where is this all going to head, gentlemen? Final word here. I mean, let's fast forward to the conclusion. I mean, are they going to put up 20,000-meter walls between the various, divisions within these banks? Are we going to see a revival of Eagle? Or, what is the risk that they're going to over-regulate, regulate to the hilt, and just kind of bury this whole industry once and for all?
I think it's interesting that the Financial Times has an editorial this week suggesting that the time for Glass-Steagall, a return to a form of Glass-Steagall, is actually opportune. But I think there's two stages to this crisis, and it's really important to differentiate between them. One is the problem within the banks itself, and the second is how the banks are regulated. That is what is going to be at the heart of the inquiry at the Treasury Select Committee in the coming weeks when Paul Tucker gives evidence. Because the question there is, to what extent was there political manipulation, political pressure on the regulators to mislead the market? If that actually is borne out, then this scandal is going to get much, much worse.
Okay, I got to leave it at that. I'm out of time. But, gentlemen, thanks for weighing in on this. It looks like we're going to be talking about this for many moons to come. Phil Parker joining us and Justin O'Brien, both out of Sydney, Australia.